Hey there, it's Brian Gormley with another edition of Where in Greater DC. As everyone knows, we film all over the greater Washington-Baltimore region in different locations and give away a free prize to the first person who guesses and correctly submits the guess to support at cornerstonepropertiesHomeInfo.com, our filming location for the week. So we are at another fun location this week. Should be pretty easy to guess. So don't forget to send your guesses support at cornerstonepropertiesHomeInfo.com. Talking today about deficiency judgments and particularly mortgage insurers and cash contributions on short sales. So let me be a little bit more clear. A lot of times in short sales, sellers are requested or required to bring money to closing or to sign a residual promissory note for part of or potentially all of the remaining balance on the loan that is being paid off. So they could be requested, $2,000-$3,000, could be $10,000-$20,000. I've seen $25,000 cash contribution requests before, even more. I've seen $40,000 cash contribution requests. I think I've even seen a $66,000 request before. Promissory notes sort of work the same way. Usually it's 0% interest rate, payable over 5 or 10 years, depending on the amount. And it's usually for part of the outstanding balance. So, $5,000, $10,000, something like that, $15,000, $20,000, depending on the borrower's ability to pay. So the question becomes, how do you get these things waived? We've gotten, $24,000 cash contribution requests waived in full. Of course, mortgage insurance companies are the ones who are usually making these requests. What they do is they reduce their claim benefit by that amount, and then they say, well, we'll approve the deal, but we're going to reduce our claim benefit by this. So technically, they're not saying we want a promissory note. They're saying we're reducing our claim benefit by this much, and then the investor, the entity that owns the economic loss on the note, would come back and say, well, we want to be made whole here for that amount of claim reduction, because the reality is, we could go to foreclosure and get the full amount, and they're required, they being the mortgage insurer, is required by contract to honor that foreclosure. The whole problem is that the short sale isn't typically contemplated in the policy at the outset. So that's your negotiating point. So how do you get these things removed? Some of the cases there's just nothing you can do. Sometimes if the borrower is making $10,000, $15,000, $20,000 a month, which we've had happen, there's not a lot of ammunition as to hardship there, right? But what you do is you go back, and typically you would want to get in touch directly with the mortgage insurer or the investor who's making the request and say, hey, look, here's the hardship, here's the monthly expenses. If we take out the housing expense that we're now shorting, the homeowner is still in a bad way. They still have no real means of paying. We need to either knock this down or knock this completely out. And we've been quite successful, actually, particularly when the mortgage insurance companies who are very aggressive at getting these $20,000 prom notes and knocking them down quite a bit. And again, the argument has to be the seller just doesn't have the money, and there really is hardship here. And sometimes you get certain exceptions. There are particular exceptions where the homeowners fall into the exception that just says, okay, yeah, we don't need a prom note. Some sort of disability, death, those kind of things. But most of the time, you've got to go back and impress the mortgage insurers with your ability to get in touch with them directly and make your case and see what you can do. So that's it for me. Sorry for the background noise. Do the 360. Don't forget to send your guesses. Support it at Cornerstone Properties. HomeInfo.com. Talk to you later. Bye-bye.